First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee, and joining me are my co-hosts, CoinDesk Managing Editor of Global Capital Markets, Lawrence Lewitton, and Managing Director of International Content, Emily Parker. Good morning. I got those titles right this time.
Good morning.
Good morning. Very long.
All right.
You're
We
recovering.
love it. Yes, thank you. All right, so let's get started checking in on Bitcoin. Bitcoin's been rising ahead for the fifth consecutive day. The XBX Bitcoin price right now trading at $56,344. It's up almost 3% over the past 24 hours. And the ETX Ether price trading right now at, let's take a look, at 1845, also up almost 0.5% over the past 24 hours, according to TradeBlock data, the most reliable reference price for institutions since 2014, with billions in assets under management benchmarked against it. Wow, Lawrence, Bitcoin's been on a tear, and we also have some inflation numbers coming out that could affect price, but Bitcoin is nearing record highs.
Yeah, but the inflation numbers came out at 8:30, 1.7% year over year for the month of February. So no surprises there. It was exactly what the market was expecting. Bitcoin since that time went up a few $100. A long time ago, 6-7 months ago, a few $100 would have been a crazy rally. Now it's just, okay, ho hum. Everything seems to have been priced in the past few days that this is kind of where it was going to go. But bond yields haven't gone up tremendously, so that's why Bitcoin is on its way up a little bit, little by little. That means that inflation is, for the time being, kind of under control. So nothing exciting, believe it or not, in the past few minutes with the inflation numbers. But that's good news for the economy, I guess.
Yeah. All right. Hey, Emily, we're also seeing the wild, wild west of NFTs continue and get even wilder. Tell me what's going on there.
Yeah, so as I'm sure you've seen, the NFT market is exploding. People are paying crazy amounts of money. Somebody bid $2.5 million for Jack Dorsey's first tweet. But I think one thing to watch out for now is we are going to start to see how much of a lack of clarity there is in the NFT market. For example, in theory, NFTs are supposed to be a way to protect artists and to give you a deed to your original art. But what happens if I, for example, make an NFT of somebody else's art? What happens if I make an NFT of somebody else's tweet? So these kind of conversations are starting to happen. My colleague Nick Day wrote about this in his newsletter. So I think this is really a space to watch.
All right, fascinating stuff. Yeah, every day, something new. All right, well, meanwhile, U.S. lawmakers have proposed a bill to clarify crypto regulations. A working group would be created to include members from the SEC and CFTC to evaluate when either agency should have jurisdiction over a particular token. In other words, when a cryptocurrency is a security or a commodity. And our next guest served as SEC Commissioner during the George W. Bush administration. Joining us now is Potomac Global Partners CEO Paul Atkins. Welcome, Paul.
Morning. Welcome. Thank you very much.
Great to have you here. All right, Paul, I would love to have your thoughts on this new bill brought on the U.S. House floor. Is it adequate to relieve concerns faced by innovators who want to create digital assets but not run afoul of regulators?
Well, I think it's a step in the right direction. I mean, it's not going to solve issues, but it's hard enough to get to different agencies, particularly the SEC and the CFTC, the Commodity Futures Trading Commission, to play well in the sandbox together. So I think this is a step in that direction, and it's a sign from Congress to urge them to try to work this out.
So now we have a new administration, and I think generally the previous administration was seen as relatively friendly to the cryptocurrency industry. What are you looking at for this new administration as far as crypto regulation is concerned? And I guess what are the most important regulations that the cryptocurrency industry should be paying attention to? What are the regulations that could really have the biggest impact?
Well, I think what some of the real steps forward in the past administration were at the Commodity Futures Trading Commission, where Bitcoin futures were sanctioned and allowed to go forward. First with the marketplace, and then of course the CFTC was there, standing there at that birth. So that was good. That was a huge step forward to make it so that institutions could more easily play in the area. And then Brian Brooks, who was the acting controller of the currency, he put forward some really important new steps for national banks to be able to act as custodians with respect to these digital assets like Bitcoin and Ether. And because the banks are afraid of dealing in something that could ultimately be deemed to be a security or whatever, that they're then being the intermediator with something that's not registered. So that then ultimately all comes back to the Securities and Exchange Commission. And unfortunately, the SEC launched really the day before the past chairman left a lawsuit against Ripple and XRP, claiming that XRP is a security. So that is a big concern going forward. Everything really comes down to what the SEC will do in the new administration, but then also what's going to happen with respect to some of those reforms that Brian Brooks had pushed through. There was a letter that was sent by some congressmen to acting controller Brooks right before he left, saying, put your pen down, we're going to undo everything in the new administration that you've done. So I think that's a warning sign, at least to the marketplace, that things may change. We'll see who becomes the new controller of the currency, but a lot hinges on that.
Hi, Paul. So you gave advice to President Trump right before he took office. Did you give him any advice on crypto? And what was his attitude in general towards digital assets? Did it affect what the regulators in his administration ultimately did? Did he provide them with any guidance whatsoever, or did he just let them do whatever they were going to do?
Well, my role wasn't really focused on the incoming president. It was really to help with the transition to try to identify policy steps that various financial services, regulatory agencies could put into effect, and to kind of outline that for the incoming folks. And so we did focus, on digital assets and some of the policy issues around that. And I think you saw some of that come through in some of the agencies. Obviously, once somebody gets in, you never know what's going to happen as far as the policies that the person puts into effect. But I think it was very important to what went on, as I mentioned, at the CFTC. And I'm really happy to say that Hester First has been doing a great job at the SEC articulating these various issues and trying to push them forward. So I'm very proud of her. I think she's doing a great job, and Lad Roisman also, I thought, did a very good job as well in this area. So we'll see what happens in the new regime here as people come aboard.
Well, you mentioned the SEC case against Ripple. What do you think is going to be the outcome of that, and what are the implications for the industry?
We'll see. I mean, the SEC obviously worked long and hard on that complaint that they filed in court. It's a well-drafted complaint. I think there are problems with it and fallacies in their argument. But ultimately, the courts will decide this. And I guess it's possible that an incoming chairman, looks like it'll be Gary Gensler, I guess he could withdraw the lawsuit, which has happened at some other agencies with the incoming administration with respect to other issues and other lawsuits. I don't know that that's likely to happen, but that's a possibility. But if not, the courts will adjudicate this issue. And ultimately, it may well go to the Supreme Court. And the one particular test that the SEC is relying on is an old Supreme Court case that goes back 50 years or so, the Howey decision that we all know, with its test on as to whether an investment contract is a security or not. And so that could be re-examined in this new digital age, where a lot of the issues around how we obviously date back to an earlier time. So we'll see how that goes in the courts. But anything could happen here, and I think it'll be interesting to watch, obviously.
Has anything changed with the companies that you deal with in terms of what they're looking for when it comes to dealing with regulation over the past few months?
Well, I think there's some uncertainty out there as far as what we'll be able to get through. Really, there was only one 40 Act, the Investment Company Act of 1940 fund that was approved in the past administration at the Securities and Exchange Commission, and that's a Stone Ridge Fund and an IDIG fund with Bitcoin futures. And so that was good that was allowed to go through, but there are a lot of restrictions on it, size and who may buy it and that sort of thing. And no other fund really got through the SEC approval process, and a number were actually disapproved, of course, by the commission over objections of the minority commissioners. So we'll see what happens going forward. I don't expect things to change in that regard too much, but we'll see once the new chairman gets in and examines these issues. Maybe there will be some opening up in some ways there. So we can only hope.
All right, Paul, thank you so much for joining us this morning.
Well, thank you very much for having me. It's enjoyed talking with you all.
Thanks, Paul.
Thank you.
Likewise. All right, that was former SEC Commissioner and Patamak Global Partners CEO Paul Atkins. Coming up, markets with Multicoin Capital Managing Partner Kyle Samani. Welcome back. Checking in on Bitcoin, the XBX Bitcoin price right now trading at $55,840. It's up about 2.2% over the past 24 hours, approaching its 58,300 record high. And the ETX Ether price right now trading at 1831. According to trade block data. All right, joining us now to discuss the crypto markets is Multicoin Capital co-founder and managing partner Kyle Samani in Austin. Welcome, Kyle. Oh, can you hear us there? All right, Kyle, Multicoin is bullish on smart contract protocols with a focus on decentralized finance. So for an institution looking to explore crypto, I'm wondering what coin or project right now presents the best bang for your buck and why? We may be having some audio issues with Kyle. Kyle, can you hear me?
I hear you now. I did not hear you for the last.
There he is.
Okay.
Hi.
There you are. All right, good to have you. All right, Kyle, so my question to you is, institutions that are looking to explore crypto and get into the game, I wonder what kind of projects or coins right now present the best bang for your buck and why, in your opinion?
Yeah, so there's kind of a few different classes of investors who are getting into the crypto space right now. The most conservative and class probably just buying Bitcoin. And this is a pretty reasonable thing to do. It's a global macro hedge against inflation and kind of the obvious base for digital gold. We don't need to harp on that too much. I think the next wave of investors is kind of getting more interesting, where they're saying, okay, what are all these coins? What are all these tokens? What do these things do? And what we're generally seeing is those people are discovering DeFi relatively quickly. And a lot of these people are finance people that have a strong finance background. And DeFi is clicking for many of them quite quickly. And they're saying, wow, like this is actually a new way to think about how to construct a financial system, and it makes sense. and there's a lot of
Any
benefits
particular
over.
DeFi project in particular that you're thinking of?
Yeah, so I mean, like if you look at kind of DeFi, one way to think about DeFi is in terms of financial primitives or financial contracts, and certainly the two largest kind of categories are borrow lend and trading. And so we're seeing a lot of attention flow towards protocols like Aave, for example, Thorchain, Uniswap, those kinds of things, because those are probably the market leaders for borrow lend and trading.
Kyle, you weren't always a fan of DeFi, and you also had kind of lost faith in Ethereum. So what changed for you? When did it change over the past few months? When did it start to click for you?
Yeah, so we've been long DeFi for several years in our portfolio, and we've continued to add length with new names and adding to existing names over that period. We've been super bullish DeFi for a long time. And today, a pretty meaningful percentage of our fund is exposed to DeFi protocols. The biggest thing for us that's changed is recognizing that we're going to be in a multipolar world, and that the probability that Ethereum is the dominant protocol, in my opinion, is quite low. At least over the next 2 to 4 years, it's very clear that crypto is becoming a lot more heterogeneous, and that the vast majority of activity is not going to happen on Ethereum. In the last 60 days alone, Ethereum's market share of kind of DeFi trading activity has gone from probably call it high 90s to low 90s. And I think that's going to continue to plummet over the next 12 to 24 months. The market has not just picked up on that in terms of narratives. But if you actually look at the data of trading volumes on Serum and other chains, it's quickly shifting away from Ethereum.
But as far as DeFi goes, you were saying that
sorry,
DeFi didn't have
a follow-up on the Ethereum question for a second, because that's exactly what I was going to ask you about Ethereum. I guess the question is why do you see this decline of Ethereum? Is it just kind of a natural, course of events, or does it have to do with Ethereum specifically? And I guess the other question is there an Ethereum killer kind of, waiting on the horizon, and what would it be?
Yes, I mean, the biggest challenge facing Ethereum today is that if you want to conduct finance, you need to have a large degree of throughput and low latency, right? Like NASDAQ and New York Stock Exchange and CME and all these exchanges, like these guys spend billions of dollars per year on CapEx on optimizing their systems to be super high performance and super low latency. And to run any sort of trading system, those are hard requirements. And Ethereum provides neither of those things today. And so what you're seeing happen is the gas fees are going up and latency is really high and the user experience is bad. And so you're seeing a lot of the leading market players go elsewhere. In particular, right, the two largest market makers in crypto are Alameda Trading and Jump Trading, and both of them are big proponents of Serum, which is a new on-chain order book system built on the Solana blockchain. Those two guys are literally the two largest traders in all of crypto, and they are saying, look, like if DeFi and Ethereum is cool, but it just is not going to get us to global financial scale in its current incarnation. And so they've started to explore other technology stacks that offer a lot more performance and throughput.
So, Kyle, getting back to the question about DeFi, though, and what caused the specific bullishness here, because even though you said you were bullish, there was a time just 6 months ago, let's say, I think you were talking to Nick Carter, where you were saying that, just 100,000 people maybe at most were using DeFi platforms. So what my question is where was the inflection point? What was the specific change that maybe got you more bullish on DeFi?
I mean, that still is true. Ethereum processes about 1 million transactions per day. That's just the hard cap of the system. And so arguing that there's more than about 300,000 people using it on a given day is basically impossible given the just physical hard cap in the system. So the absolute number of users has not meaningfully changed. The trading volumes and borrow lend volumes have gone up, which just means the average transaction size has increased, but the number of absolute users on a daily basis literally cannot increase. So that hasn't changed. Our bullishness in DeFi has been based on understanding core financial primitives and principles and recognizing this is a new way to construct a financial system. That is a completely separate set of questions from understanding which technology stacks are going to get us to the level of scale you need to run global permissionless finance.
Great.
You have a few. Oh, sorry. Never mind. I think we ran out of time. Oh, well, you have a couple of dozen projects in your portfolio. Which one has surprised you most and why?
I think the thing that's been the most interesting thing about it has been probably Serum. It's a new central limit order book built on Solana blockchain. Volumes are up 50% week over week for the last probably month or two. And it's now rivaling Synthetics, which is generally considered one of the top DeFi protocols on Ethereum. Again, narratives have not really picked up on this generally, but if you look at the data, that's actually quite clear. And what we're so excited about with Serum is you get all the benefits of traditional financial markets in terms of low latency order book based trading. You get capital efficiency, you get the sophistication of traditional market makers, but you're also getting all of the benefits of DeFi in terms of openness, permissionless access, composability. You get all of those kind of amazing benefits. And it's just very clear to us that just because you go to a DeFi world doesn't mean you need to give up all of the beautiful innovations of modern finance over the last 40 years that we've seen happen on all the major leading stock exchanges around the world.
Okay. Kyle, you're on the cutting edge of this market, so thank you so much for sharing your insights. Very fascinating.
Thank you all for the time. It was a pleasure to be on.
Thanks,
Great.
Kyle.
All right, that was Multicoin Capital co-founder and managing partner Kyle Samani. Coming up, a look into how Venezuelans are using Bitcoin and checking in with CoinDesk Global Policy and Regulation Managing Editor Nick Day. Welcome back. Time to check in with CoinDesk Global Policy and Regulation Managing Editor Nick Day, who is also the editor of CoinDesk's The State of Crypto newsletter. Hey there, Nick.
Hey, good morning.
Good morning. All right, what do you got for us today? What have you been tracking?
I think the big thing to watch out for today, two things really. The first is the House will be voting on the American Rescue Plan, which is the COVID relief bill, the $1.9 trillion package that includes stimulus checks, along with a slew of other priorities for the current administration. I believe that's expected to be voted on today, and presumably it will be passed. So within the next couple of weeks, we could be seeing these stimulus checks roll out. The other thing on the Senate side is the Senate Banking Committee will be considering the nominations of Gary Gensler and Rohit Chopra for SEC Chair and CFPB Director, respectively. That begins at 2 o'clock, and as I understand it, Gary Gensler is expected to be voted out of committee, meaning he will be going to the Senate for a full vote. I'm less sure if Rohit Chopra is expected to head to the full Senate, but so far I haven't seen anything to suggest that he's not doing it. He's not going up.
And you've also been following this bill to study digital asset regulation. Can you tell us a little bit about that?
Yeah, so this was a bill sponsored by Representative Patrick McHenry yesterday, Republican of North Carolina. He is also the ranking member of the House Financial Services Committee, and it's co-sponsored by Representative Stephen Lynch of Massachusetts. So this was originally supposed to be introduced on Monday and expected to be passed via a voice vote, which indicates there's broad bipartisan support for the bill. I think that's not happening right now. I believe it's going up to committee, but basically, if passed by the House, Senate, and signed into law by the president, the bill would require the SEC, CFTC, and various industry participants to form a working group to basically evaluate how digital assets are regulated in the U.S., how that regulation compares to other countries, whether there are issues, whether there's an impact on the industry due to a lack of clarity around these regulations. And that working group would be expected to file a report on this within a year of being formed. So basically, it's asking not only the regulatory agencies governing the space, but also academics and industry participants to say, hey, here's what we think, here's what we're seeing, and possibly even here's how we think you can improve.
Hey, Nick, speaking of bipartisan support, is there any indication that there's any Republican support for the $1.9 trillion spending bill that's going to go before the House today?
So I think that depends on where you ask it. If you're asking, is there bipartisan support for this bill, period? I think the answer is yes. I was looking at a Monmouth University poll from last week that suggests the majority of Americans do support this bill. If you're talking about, is the question, is there bipartisan support in Congress? I think the answer gets a little more complicated, and it's probably no. It seems that, at least in Congress, it's primarily Democrats who are in favor of this. I believe it was a 50-49 vote last week in the Senate that passed it to the House. But yeah, there seems to be a bit of a divide here between, how state and local folks are looking at this and how folks in the federal government are.
Great. Thank you for your update, Nick, and joining us.
Thank you.
Thanks, Nick.
Right, that was CoinDesk Managing Editor of Global Policy and Regulation, Nick Day. Don't forget to sign up for the State of Crypto newsletter on CoinDesk.com. All right, our next guest is a member of the Venezuelan diaspora. He has built a career working to empower Venezuelans through the usage of non-sovereign digital currencies, chiefly Bitcoin. Joining us now is Alejandro Machado, co-founder of the Open Money Initiative and the head of research at Bitcoin-powered remittance app Value. Welcome, Alejandro.
Hi, thanks for having me on.
Great to have you. All right, Alejandro, high inflation and lack of trust in the government has made Venezuela receptive to monetary experiments. Amid the rise of Bitcoin, how are Venezuelans using Bitcoin? And start off with that.
Yeah, that's right. So Venezuelans have used Bitcoin. Some Venezuelans have used Bitcoin as a way to get away from high inflation. And this is not unique to Venezuela. Alex Gladstein noted a couple of days ago on Twitter that 1.2 billion people live under double or triple digit inflation. But in the case of Venezuela, what we've always wanted is access to the US dollar. So we are right now working with Value, a Y Combinator company. And as you know, we focus on, Y Combinator companies tend to focus on what people want, right? Which is the smart thing to do. And with the realization that people want access to the US dollar, Value has created a digital asset that is backed by Bitcoin because it is the most liquid cryptocurrency and the easiest way for any Venezuelan to get in and out of the Bolivar. It's just that it's not very usable at the moment because you need to have some experience in trading or some experience with the local exchanges to be able to use it directly. So we focus on providing this kind of interface to allow people to use the dollar quicker and more easily.
Alejandro, we just had a conversation with our previous guest, Kyle Samani, on DeFi and Ethereum. So I wonder, are there alternative currencies that have gained traction in Venezuela?
So there is a bit of a usage of DAI and a bit of a usage of Tether in markets, but Bitcoin is still king. If you look at the volumes on local Bitcoins, and you can track this using Matt Alberg's wonderful tool, Useful Tulips, you can see that the volume of Bitcoin is just the largest. And so that's what we decided at Value to use Bitcoin as an asset that is backing the dollar, right? That we offer to our clients.
Speaking of alternative cryptocurrencies, the Venezuelan government has introduced their own digital currency. Many people would not call it a cryptocurrency. But what is the status of the Petro? Is it alive? Is it dead? Is it being used for anything?
So some pensioners get paid through the Petro system. It's just it might be more compared to a CBDC, to a very rudimentary CBDC, where the state issues certain digital tokens. It doesn't matter if they're on a blockchain or not because they would control all the servers and all the nodes anyways. And they have a system that allows them to then cash out for bolivars, which is the local currency. It works in a very limited fashion, but it's been something that the government has been trying to push, but they have been unable to get traction because of their technical difficulties.
Good morning, Alejandro. We hear a lot of positive use cases when it comes to Bitcoin and crypto, but have there been any economic imbalances in Venezuela due to its use or due to crypto mining?
Well, so economic imbalances, that's interesting to think about. What I've seen is that Bitcoin has been used for remittances. And that's been proven. Matt Alberg also wrote an article with us with the Open Money Initiative last year that looked at the volume of trading between Bitcoin and local currencies in Latin America. And when there was a big blackout in Venezuela in March of 2019, all of the other countries also had a dip in the volume. So this proves that Bitcoin is being very heavily used for sending money back and forth from Venezuela and to Venezuela. I'm sure there have been some people that have gotten enriched by Bitcoin, if that's what you mean by economic imbalances in Venezuela as in other places. Mining, has been, the government has been trying to crack down on mining at some points. Right now, they are more pro-economic liberalization, even though they don't admit it. So miners have been left alone for a little while. We don't know how long that's going to last, but I'm aware of a few people that are mining in Venezuela that are able to do so without many restrictions.
All right. Thank you so much, Alejandro, for joining us and giving us your perspective from Venezuela.
Absolutely. Thanks for having me.
Thank you.
Have you. All right. That was Alejandro Machado, co-founder of the Open Money Initiative and the head of research at Bitcoin-powered remittance app Value. Time now to check in with Crypto Twitter with our tweet of the day. This one coming from Lena Sesh, the managing director of the BTC Times in Germany. All right, first you buy Bitcoin because you want to make money, then you buy Bitcoin because you want to save money, eventually you buy Bitcoin because you don't want to lose money. Very clever, Lena. All right, that's it for First Mover. Coming up, tomorrow's special guest, Binance CEO Changpeng CZ Chao. Thank you, Emily Parker, our CoinDesk Managing Director of International Content, and Lawrence Luton, Managing Editor of Global Capital Markets. I'm your host, Christine Lee. I'll be back live at 3 p.m. with All About Bitcoin. Coming up at 10:30 a.m. every Wednesday is Coin Toss, CoinDesk's weekly debate show. You're watching CoinDesk TV.